Alrighty. Doc here from North America. Good morning, good afternoon, and good evening. It's Tuesday. We're moving down the line. And what do we see on the screen as usual? The dollar index. Dollar index is kind of a little firm. I guess interest rates must be trying to perk their little heads up a little bit. We'll see. Let's just look at it a little bit closer. Yeah, just 2 days now. A little pushing up. You see the same thing right here on Chicago Quant. Same situation. It's trying to perk its head up. You see the line moving up. We're still in red. And it is the dollar index, right? Yes, it is. And you can see the weekly. Let's move that zero line down so you can see it a little bit better than that. And you can see the zero line. You know, the product's been in the weekly sell in this region. Went into the fast-moving sell right there. Obviously helping that good sell signal, having fun. And then for the non-derivative or option traders, or binary traders, then the safer trade is right here, of course. There's a slower moving one. And so you can see overall the dollar has been, it went into the sell yesterday. That's right there. Let's put that line in. I thought I put that line in. Okay, there we are. And so it put that sell in yesterday. It's, kind of just a weak natural flow of side action. It's more that, what do we call it? A channel. It's more of like a channel at this point. And in some little ways, it has that little reverse head and shoulders look to it too. Which, what would that? Well, I guess, we know a few things that are going to come up along. We have a big number on Friday. So maybe that's the anticipation. We have a core inflation rate number coming out on Friday. So at the end of the month, it comes out every month. And the Federal Reserve loves staring at it. I think they're more like not psychotic. They're in, it could be psychotic. They're in a dream, I think. Sometimes they just stare at numbers and they just think about it. They for a year plus they told us when inflation went from 1.4 to basically 5.5, or was it 6%? Under Mr. Biden's first year, they kept on saying it's transitory every month. They said don't pay attention to it. It doesn't mean a thing. And when it got up over into the sixes, they thought, I guess maybe we're a little off. But maybe it'll just be transitory for a quarter. And then, it went to almost 10%, and they finally started to raise interest rates. They don't like to raise interest rates when the Democrats control the White House. It's very odd. They're not protecting the economy, that's for sure. So, I guess it's like this static psychosis type thing that goes on. They have all those PhDs at the Federal Reserve, economists, and they're still in the Keynesian point of view of you got to destroy the economy to save the economy. It's like, there's a little fire on the stove. And let's just burn the house down and we'll build another house. That seems to be the nature of it all. So that little reverse head and shoulders right here, let's put a big circle around it for fun. That reverse head and shoulders flavor that we're getting out of that position there, And you can see right there is the reverse. Maybe it's going to bang, bang, bang and then take off and take out that top. And, for us, I guess you could say fundamentalists who are kind of been fed up with the U.S. currency being the world reserve currency now since the 1980s. I've been with the rest that says we need to distribute the risk to some of the other countries that benefit from us taking that burden. Now there's those who love to spend money and think that being the world reserve currency is the cat's meow. In other words, it's the best thing of all. Is not. It wrecks our economy on some 1.5%, 1% GDP type of thing. Because money is being printed for outside the country. It's not being spent in the country. And so what happens is our money supply grows, but our economic, the gross domestic product, it doesn't grow because of it. And that's the problem. So, anyhow, that is my morning riff, I guess you could say, in the sense of what I see by looking at the dollar index this morning and seeing it firming up. I'm like, oh, geez, don't do that. Can't we just stay here for a while? Are we here yet? All right. From there, we're going to slide over to the euro. Let's see how the euro is looking this morning. Are we here yet? And there it is. There's the euro. The product I just described. When I started trading currencies, there was no euro. The euro was a dream. There was a European unit we were hoping to create, and that's what it is now. It's a European unit. And we were hoping that the Europeans would pick up some of the responsibility of keeping the money supply and the commerce and currencies kind of like organized. We were hoping for that, and it started to play out. It has. They're the first largest. They're the second largest economy in the world. Their currency is the second most powerful currency in the world, and then obviously you have Japan number 3, and then England, and you have all kinds of combination mixes going on with it all. Let's see. Ferris M. I like that, like in Ferris Bueller. Are you from Chicago? What's your opinion on NASDAQ, the U.S. market in general? Short term. Define short term. Today, this week, this month, this quarter, this half, or this year. Define short term. Remember, I'm from the professional side, so short term can mean, has to be defined. Saudi Arabia, your best friend. So, yeah, I think Saudi Arabia is fine. Matter of fact, I think the media keeps on inventing reasons to separate the United States from Saudi Arabia. Not the Americans, the media. 2 or 3 months. Okay, let's take a look at it. And thank you, Ferris. I like that. I love that name, too, Ferris. I always think of like Ferris Bueller. All right. So let's jump over to... Let me get rid of that circle, too. It'll remind me of what frustrates me. All right, there is the S&P 500. We'll use the S&P 500 in some ways, and we can, if you would like, we can go back and forth. Let's see, where's it? NASDAQ, that's right. You said NASDAQ. I'm sorry. Let's go to NASDAQ. So the NASDAQ is performing pretty well. I'm understanding that some 70% of the companies reporting over this next couple of weeks, matter of fact, I heard it was as high as 77%, they believe will outperform what they think they're going to do. So now you can see here's the NQs, and you can see we're in a daily sell now for a bunch of days here, but we haven't really gone down much. Over the last couple months, you can see we were in a weekly buy there. We went into the weekly sell for 1 week here. Let's put that back in there again like that. There's the weekly sell. And overall, that's right. And then overall, we've been in the weekly buy since the 11,000 area. So there's that. And then so overall, the math has been trying to tell us over and over again, if you're not long, you're wrong. And so that's been pretty much what we've been seeing. All right, now let's go into the future. All right. Well, we see today, this week in particular, we see for the last couple of days it's in a sell, but it hasn't really broken down to say 1250 or 12,500. Also at the same time, the math is also showing us that the fast has broken down and the slow is still holding on, but there's a lot of pressure on it at the moment. And I would imagine we won't have a real clear picture until Friday unless the slow green line starts to break down. And then you can see here, basically, with the fast way over... Oh, let's do this too. So with the fast way over here, getting into the weekly buy from the 11,300 area, and then the slow joined in, who we always recommend paying attention to the slow if you do not trade options or binaries. Okay? In other words, if you're just trading what we refer to as the hard delta or the actual product itself. And then you can see it slid into a weekly sell. You can see how the fast broke down for a couple weeks in here as it was breaking down. You can see the green breaking the manifold here. We're doing the same thing now, so I would imagine we're going to go through a consolidation thing like this again, and then probably produce a higher low, something like that. One of the reasons is that it was just in my head and just slipped out of it, like a butterfly just flew by and I got lost. The reason is that interest rates are probably at the end of the increases. So we're seeing the classic Wall Street expression, buy the rumor, sell the news. So by the Fed raising interest rates next week another quarter percentage point, probably will keep the strength in the NASDAQ. And at the same time, because it's very interest sensitive. And the NASDAQ is up, I think, like about 15, I think it's like 12% for the year so far. It got up as high as 22%. Actually, we're kind of at the highs now, so we're still holding up, for the last, couple months, or for the last month or so. Again, Friday's a big number. They'll pay attention to that. And the reason why they'll pay attention to that is they're going to try to interpret the 0.25% increase on Wednesday of the following week. And then if they don't say anything in the news conference, I would think you'd see more strength in the NASDAQ, because it's very interest sensitive. And because of they stare at the interest rate factor more. So they'll, following, say, the 5-year or the 30-year or something like that, is probably more of a indicator, and a direction to the NASDAQ, or what they refer to as the Tech 100, what we used to refer to. And let's put it up over here on J4X. Let's see. So let's see, where's that? You see there is at 13,004. Let's put it up here, right there. Oh, I see. This is a 4-hour. No wonder it's acting odd. Let's see where we go. Tech 100, right? One more. There it is. And we go into the daily, like so. And there it is. And so you can see that pressure that's been on it. You can see the fast-moving stochastic moving down against the slow-moving one. We've been looking at this volume stuff. We had some people on yesterday that were very interested in volume. I follow volume on a intraday basis, but I don't find it accurate on anything but intraday. And so when the other people that came on yesterday to discuss volume, they kept on telling us that it was a leading indicator, and it's definitely not a leading indicator, that's for sure. It's up there with RSI and MACD. It's a lagging indicator compared to what you see on our screen there now. Using a fast-moving stochastics D against a slow-moving stochastics D, and then using Hinky-Ashke bars to try to confirm the strength of the moves themselves. In other words, you can get long or short because of when they all join together. So, how was that, Ferris? Now leave the what was it? Was it a Ferrari? No, I can't remember or was it a Spider? I forget what he wrecked. But try not to wreck your machine today. I love that. But if you could go see a cricket match or something entertaining, sports-wise, go for it. Go, Ferris, go. I like it. Welcome to our cyber trading pit. All right. Oh, no problem at all. As I always like to say, the cost for a question is cheaper by the dozen. So if you ask for 12 instead of just one, that's the way it goes. It's cheaper. All right. Let's see. You're welcome to ask any question anytime. And I always say the only difference is there's a long answer or a short answer. And that's about the only difference. All right. Now from there, just one more look again at the dollar index, just because I realized it was the 4-hour from yesterday that we were looking at. And then we'll run off to the euro again. I just want to see where the dollar index is. Dollar. There it is. Yeah, it's red. Okay, that makes more sense to me. I couldn't understand why it was green. And then you can see right here on Chicago Quant, the same gig. It is, where are you? Stop hiding. Where'd it go? It's this dyslexia of mine. It just makes things disappear, and I'm like, there it is. Next to heating oil. So you can see there, the pressure is the same. They're both moving down. They're feeling pressure at the moment. Oh, what do we got here? Amir, hi. Thanks for your market evaluation. Also, would you let's have your ideas on prediction about commodities, valuable metals, and most interesting cryptos. Sure, I'd love to. Would you like to look at gold first, or silver, or how would you which metal would you be like to get? And commodity, when you say commodities, you're looking at the metals complex, or you're looking a little beyond that. And we do follow Bitcoin here too. So just give me an idea where I should start with you. Which product you would like to see. I'm going to sip my tea as you come up with the product you want me to start off with. Well, I'll wait, but I think I'll throw gold up there for you. How's that? Or, you know what? You see, yeah, you said metals first, so we'll throw gold up there. There's gold. Gold is a lot like the way we looked at the S&P. Was it the Nasdaq 100? We went into a weekly buy back in November. In the 17, it was in the 1600 and change, something like that. 1700, right there. We went into a weekly buy back here. Let's see if we can show you that again. Right there, all the way back there. We went into a weekly buy, and as I described before, looking at our math, I gave kind of like a flavor of how to read the lines, the two algorithms here. And so from there, it ran constantly in a weekly buy all the way up to when the slow and the fast joined in together in February. Now this fast started to drop right here, and the daily joined in with it right there. So this was no real surprise when it broke down from the 2000 area and tried to battle its way down into the 18s. Now let's fast forward to that. You see we've been back in that weekly buy. You can see the fast joined in this week, and the slow joined in too at the same time. We were in a daily buy, and a lot of strength came from that. That's usually our math is in the high 80s accuracy all the time for the last 40, 50 years, something like that. I've back tested it against the Dow Jones Industrial Average. It goes back over 90 years of accuracy on an average of about almost 90%. It's like 87, 86, 85, 88, bounces around depending on the time of the year. And so you can see here it's gone back into the buy. It is fighting not to fall the same way that the Nasdaq. Now they both have one specific characteristic. They're both very interest rate sensitive. Okay. Oh, there we go. Gold, Bitcoin, crude oil. Thanks. Okay, cool. Oh yeah, can you hear me better now? How's that? Is that better? Testing 1 2. Testing 1 2. Is that any better? Let me know if that's any better. So, gold is very interest sensitive, just like all the rest. And so it's not as much as an inflation play as it used to be. It's more geared towards I guess the interest rates more than anything else. And at the same time, interest rates started to drop, metals started to move up. Inflation did explode. They had to do something. They had to come up with something, So the Federal Reserve had realized how bad they had done about predicting what inflation was and when it was happening and where it was going. So they had to do something about that at the same time. All right, so what we see now is we see it playing with the zero line right here. Okay? But at the same time, as much as it's playing with the zero line, it's not really breaking down much. It's underneath these, what I created here. They're a combination of my mathematics and a standard deviation. Okay? That's what these two gold mirror imaged lines are. And I use them to appreciate overbought and oversold. It gets way up above it, and it starts to break down. You can see the sideways action. It tries to make another low here. It doesn't do a good job. They spike it, it fails, and now they try to making lows. Now, in this particular case, just like the NASDAQ 100, it's not doing too good a job at breaking down. It's holding up. It's fighting to stay long. You can see on the daily, we went into the sell-off of this, and it was really sloppy, stayed down, but not really damaged. I really see it at this point in time, with the way the central banks are buying the metals, it seems like, and with inflation kind of stalled in the 5-6 area, it's very sticky at this area. The core rate is really important at the moment, and we'll see that on Friday. And the core rate is really representing a lot of problems. Better? Good. Oh, excellent. Excellent. I'm holding my thumb on it. And I'm standing on one foot. And I have a little tinfoil on my head at the same time, so it makes it work much, much better. There we go. And so, anyway, that's the way I look at it as with gold, okay? And I believe that what we're seeing, I'm going to throw this in with it at the same time, silver seems to be playing catch-up. It's really battling silver to try to not fall apart. Now, it went into the daily sell 3 days ago. It's been in a good buy from the 22 area. It got up to the 26 area from that buy on a weekly trend. You can see the fast is trying to break underneath at the moment. But I believe that just like the NASDAQ, I think they'll try to correct a little bit. And then I think there'll be more strength, or at least sideways up movement for the next few months. I think, but our math will tell us each week, should we be long, or should we be neutral, or should we be short? And that's how we work here. In other words, using a crystal ball, you can see here the daily system right there. It gets into a buy, and it has a natural tendency to get going. And then it joins in with the weekly, and then it keeps on going. Okay, and then we get a sell for one day and back into a buy again. And then you see we finally get into a sell. We finally are starting to get some length in that sell for about 3 days. And then it went into the buy right there, actually, off of that one. And it was a very poor buy. Especially with the two big lines trying to move back down again. You have to be concerned about that. And then we go back into the sell here. And then you can see it's really, all right, so today they made a better low. It looks a lot better, the sell. But overall, it's not really breaking down. And so I think that the precious metals themselves are going to stay firm until further notice. And the only warning I can give you, let me just show you this. Platinum is making some really, and that's got to be fixed. I'm not sure what that malfunction is, but platinum is in a daily sell now for 2 days. It went into the sell. Let's see if we can find that. Let me throw another one up there of platinum that's saved that we send the clients. Here it is. All right, so something's wrong with that particular data feed. We have to fix that. So it went into the sell up in here, you can see, and you can see that it pressed, and something's wrong. I got to fix that. I'm not sure why it's down like that. And you can see it's following through again today, and it went into the sell yesterday, and so that's a warning sign usually that there's some pressure on the metals complex. But notice the weekly is still way, way high. So we're going to keep track of that. Now, I imagine it's much, I think it'll reflect more weakness than anything else. Where's it at again? Let's just, there we are. You can see here, it's breaking down. It's having some pressure, and we'll see. But I like to watch platinum as an indicator. So not recommended to trade gold. Well, I trade everything. So, you mean buy gold and hold? I don't think there's a problem with buy, hold, and gold if you do it the right way. In other words, if you dollar cost average in, you don't over leverage yourself, so forth and so on. If you use options, binaries, spreads, things like that, there's no problem with that. Buy on weakness until we fall into a weekly sell, basically. You see what I'm saying there, Amir? It depends on the vehicle and how you do it itself. That's the most important thing. After getting, our direction, the chart's directions themselves, the math, what it's telling us, the idea is to use the right vehicle to trade it. So I hope that makes some sense there. Now, where was the other one? You wanted to see crude oil. Let's see what crude looks like today. Here's the front month. We just switched the contract. Right there's the June contract. It's been in the daily sell from the 80s area. We're moved back into the weekly sell here. It's been real choppy, real sloppy. It gets into a daily sell here, and finally gets into. Matter of fact, I don't think I even have the we don't the fast is the 3 on a 5, a 3-5. So you're seeing what the fast looks like. It's moving interestingly, and you see it goes back into a buy here, and you don't want to be short at that point. That's why we say if you want to get short, you buy like a put spread or something that's limiting your risk so you don't get stopped out. Then it goes into a buy, and obviously in this case here it was in a daily buy, so you will not be short during this whole move because of this one reason right there. It's in a daily buy, and then it goes into a daily sell here for 2 days, and it goes right back into a buy again. So it's not the energy sector's really screwy right now because of Mr. Biden and how he keeps on trying to force Saudi Arabia to be the go-to or something like that. They don't want to be the go-to. They want to sell energy to people that need it, not the people who can produce it. It's the strangest thing in the world. And so I would say that with the energy, I kept on thinking we were going to touch the 62 area. We touched the 64 area instead from that last sell-off. I'm more bullish than bearish on crude. The math right now is saying that it's going through a consolidation, and you can see yesterday it jumped into a buy. Today it's flirting with a sell again. It's right on the edge of it. So right now I would say that I follow the math every day, and it comes down to the tools on how to get long or short anything. A daily trade right now is trying to tell us that if this thing would close in a daily sell today, maybe it'll break down into this area here again. Maybe it'll take out these tops of the 74 or 75 area, or go visit 75 or 73 or something like that. It wouldn't surprise me if we found ourselves back down there again. I don't know if I can blame anything in particular coming out that would change that at the moment. It's just the odd tendency of our government right now to stop oil production. Very weird. So weird. Anyway, honestly, I tried a combination trade of 3. Gold, pairs trades against all of them. So gold against Brent and Bitcoin in a demo account, and made 10 times over the equity. Interesting. So let's see, were you long Bitcoin? Were you short gold and Brent? I would think that would be the winning play. Because Bitcoin, is a really good leading indicator to the stock indices and so forth. Or I guess it was the other. You might have been short Bitcoin and long the other two. But Bitcoin is confusing. Let me put Bitcoin up there at the moment, because I'll tell you, we talk about it here and we show it. The crypto is really a leading indicator to everything that's going on, which is really interesting. Right. Where are you? Not there, not there, not there, not there, not there. Must be one more up. There it is right there. It's been a daily sell since back here in the 30,000 area. The weekly, it stayed in that weekly until basically just recently. It broke down there last week, both the fast and the slow, and has really gone nowhere. It just told us up in the 30s not to be long anymore. It didn't really give us much of a sell signal, except for on a day-to-day basis. I think it was right there. That's the sell right there. So it gave us its sell right here. It leads the market, really, the stock indices really well, and it seems to be leading the gold on some level too. You see gold moving down from it. Let's go back to gold for a second here. Let's put that thing up on J4X at the same time, so we're looking at it. Right there. There's the Bitcoin, with all that weakness on a day basis. And then over here, let's just take a quick look again at gold. You can see here it broke down basically the same time. Crude oil, a little different, but mainly more downside than upside. Same thing, and it seems to go. It's more it accentuates the trade even more. So Bitcoin seems to go further percentage-wise in either direction. Goes down faster and bigger, and goes up faster and bigger. So it's very interesting. During the last, let's see. So Bitcoin, long and short, both Bitcoin and gold. Long and short, huh? Which out of the three, what was? Were you long all three and short all three? Is that what it was? Because they seem to all move together during the last 20 days, long and short. Well, you mean you were short gold, Brent, and Bitcoin, and then you were long Brent and Bitcoin? Is that what you mean by that? Long and short, both? Or were you shorting oil and buying the other two? I would imagine the crypto generated the most money out of it all. And then gold probably was second, and then crude oil. 20 days. You can see crude oil here going back about, like almost 20 days back. There's 5, 10, 15. Yeah, so I mean, we went into a daily buy here, but not a weekly. It's been really sloppy of late. It really has. The daily saves us constantly from being in trouble. And most of the time, they're both working very tight together, but the Biden policies seem to have it all upside down. Let's see, during the last 20... So started with long for both, gold and Bitcoin. Okay, and then short both after a while. And then you have gold and Bitcoin on one side and oil on the other. Is that how it works? Yeah, definitely the crypto is the best because it goes the furthest. It does, and it follows them. Or let's put it this way: it leads the trend of gold and crypto. So, yeah, that makes total sense. Very good, very good. Interesting conversation. I'm enjoying it enormously. We go through, at the very end, what I do is if I don't show everybody what we look at each day, I do it I can do it in 1 minute. I mean, I can just put them up on the screen. They can take a look at them in the what do you call it, the video, that the Dukascopy Swiss puts out. So this is no problem. If you want to discuss things, I'm glad to discuss them. I'm very happy to discuss them. It makes my day very entertaining. And you start to give me ideas what to do. In other words, I might try to do that with options. In other words, I don't really think about it that hard, but I could go and do, Bitcoin has options, and the other two have options. And just put bull spreads on and bear spreads and do the same thing. Short the oil, buy a put spread on that, or basically sell the call spread. Sell the call spread on that to compensate for the decay of being long the gold bull spread and the bull Bitcoin, and then reverse it. So, and probably do it on a daily basis. It would make sense. No problem. Glad to talk about this stuff. All right. From there, and remember, traders, like I said, it's always cheaper by the dozen on the questions. All right. From there, we'll go over to... We were looking at the euro. Let's finish the euro off real quick. And you can see it's working its way down today, right there. See the same thing going on right here on the euro, right there. So this is green going up. This is green going up. You can see our buy signal there. You can see there's the buy signal right there. You can see our weekly buy signals all the way back in here. And let's see how the weekly looks like on the euro. And there it is right there. It's doing the same thing. Lots of buying signal telling us that this product wants to go up. You can see the volume has been dropping on that rise. I don't know what that exactly means in the sense of does it help or hurt? I don't know. You know, we were never explained what it was supposedly a combination of the volume bar with the candlesticks, but they're not really. They never came back to us on that, so not sure what that all does. Let's see. And with gold, oh, and AUD with gold also have some correlation. Yeah, you're talking about the Australian dollar. For a long, long time, the Australian dollar was the go-to if you wanted to buy metals and do. Was it was it when you sell one currency and buy not a pairs trade, but where you it's a pairs trade, of course, but you're betting on the premium, overbought premium versus underbought premium, that type of thing. The I forget what they call it at this point. We haven't talked about it in a while. But yeah, the Aussie does a good job of usually representing the metals complex, the commodities themselves. I agree. From there, we go to cable. You see cable's breaking down a little bit this morning again. We're seeing weakness right there. The weekly's very firm right there, so it's not the worst thing in the world. And over on J4X, you can see the same thing on its weekly signal right there. Holding up very well. That's the weekly holding up for a while here now. And then when we go back to the daily right there, you can see it's hasn't gone red yet, but it's starting to. See, there's red up there and red there and green. So it's starting to try to make a move on the downside. And so we can see that pressure, and you can see the green line piercing the dash line. So that's the strength and weakness of it all. Now we go from there to what do we go to there? We go to the Swiss. Let's see what the Swiss is up to. Right there. The Swiss on the daily has been pressing down. You can see that for a bunch of days, which is a healthy thing for them, of course. It means it's gaining against the dollar. And over here on Chicago Quant, we have right there, same situation. Someone asked us about Bollinger Bands, so we put it up on there. I just left it there. It's kind of interesting to watch it play with our math, where it goes into the weekly sell here on the fast, joins in with the slow, stays in there throughout the whole thing, but the slow actually lifts up through the zero line for a week again, mixes it up again right there, and then breaks back down into that sell. And the sell there was a nice win, and that perch there gave us just another chance to get short again, and another one here stopped you from questioning your sanity of trading and gave you another short and another win. So that's how that rolls there. I think I'm going to have a sip of my tea. Amir, I think I'm going to label this webinar, what we just talked about too. I think that's very fascinating. I think it's very insightful, and I'm thinking I like that as a title. So I think we're going to say gold, oil, and Bitcoin. Try trade. I think that's how we'll label it. It sounds like fun to me. So, all right. From the Swiss, we go over to the biggest Asian economy of all, and that is the Japanese economy. Because they have a currency and so forth, so we can measure it. You can see here, it's moving up. You can see the weekly, it went into the buy last week. Not sure why we didn't put the line in there. Let's remove that. Boom, 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 right there. Notice the fast joined in 2 weeks back. So it's been trying to tell us that there's pressure on the upside. Whoa, not that color. Let's try that again. Right there and right there. There we are. And so now, as you can see, let's get that box out of the way. As you can see here, the yen has been moving back up, losing against the dollar, which is a little surprising. because it's broken away from the trending with the Swiss. So obviously there's some type of issue going on there, you know. And that's a little, you know, what it's been kind of interesting. What else can we say about that? I would say the yen is, just trapped in a big range. That's what it seems like to me. It doesn't seem like it's breaking out of it either. It's played down pretty well. We have no problem understanding its direction because of the weeklies, but I'm a little surprised it's not joining in with the rest of the pairs trades. Amir says, thank you. I am actually want to do live trading these three. I want to say that most times I would say that is kind of crazy. You know, in other words, three pairs. But I want to say this about that, and that is that gold and oil and crypto, Bitcoin, move together. And what you're really doing is your strategy or your investment, I guess you could call it the investment, is you're really thinking that what you're trading on, in other words, what you're hoping for, and it has shown that it does, and that is that the cryptos outperform the stock indices. They outperform gold. They outperform oil, and so you're really on that trade. The real pillar of that trade is the idea is getting the crypto on the right side of the trade. You get the crypto on the right side of the trade, and you're there. So, if you want to try to explain what made you go long cryptos at one point and in short oil and long gold and crypto and short oil, we can have that conversation too if you want. I know what would make me do it, and that would be looking at my math. When I go into a daily sell, I think I wouldn't even be worried about the weekly. Actually, when you're looking at a pairs trade that is very see, in other words, most of the risk with a pairs trade is that you're betting on one object that is not related really to the other. And what it does instead is that, so in other words, if you buy, in an international sense, if you buy Ford Motor Company and go sell Lamborghini, or buy Vauxhall, or sell Jaguar, or whatever. In other words, if you're trading a pairs trade of one car company against another car company, that could be dangerous, because poor management or great management can make that pairs trade not function correctly. Okay, they won't follow the same trend. Whereas here, the gold and the oil and the Bitcoin all trend together all the time. It's very rare for them not to trend together. So I can say this with confidence, and that is that it's not a crazy idea to try to trade this tri pair. I guess you could call it a tri combination. Really, it's a tri combo. That's what it is. It's a tri combo. So, I would watch it for another 20 days or so, maybe, something like that, because we are going. Remember, we're going to be at the end of interest rate rising going into the next 30, 40 days. So, I think I'd paper traded another, at least 25, 30 days to get a flavor for it. But there's no doubt that the three of them move together. We've shown you that on the charts, and we can show it to you again if you want me to, and we can take a look at the historical, nature of them all. Does that make sense to you? Yeah, and that's what I would call it too. It's a tri combo. That's what it really is. Yeah, I think that one day you probably will. I think it's a good combination if you're going to play with a combo trade or a pairs trade. This one seems to make a lot of sense. It does. Makes a lot of sense. So, let's give you a good example. Let's just go look at our math. All right, so the first one we'll look at is gold again. Right there. So there's gold. Wait a minute, where's gold? There it is, right there. Okay. So let's look at crude. Crude has been on this plateau moving down for the last month. Gold has been the stronger of the products, but doing the same thing. So they're both the same trends. It's just one outperforms the other. And then Bitcoin, right there. Bitcoin, which is interesting. Look at that. Is that Bitcoin? No, that's the dollar index. And Bitcoin right there, it's right underneath it. And Bitcoin, same way, and even stronger. So it outperformed the strength-wise. Gold was second, oil was third. So over the same time period. So they all tend to do the same thing. Yeah, well, oil's volatility is really powerful, and it's always been that way. Oil can just fly. I mean, can you imagine? Oil went to a minus $39 a futures contract because people didn't want to take delivery. Minus $39. I mean, you don't see that in gold. You don't see that in cryptos. You don't see that type of action. Oil is probably the wildest of all the products of the three, really, when it comes to volatility, when measuring it by volatility. Disconnected? Yeah, I'm here. Can you hear me? Let me just double check. Let me check. Yeah, I hear me. Okay. Yep, I hear me. So, I would say that pretty much that's what it really comes down to. Let's see. So, can you hear me now? Can you hear me now? Testing 1 2, testing 1 2. Still here. All right. You'll be able to watch the video. So if you've lost us, I would say more than anything else that basically, let's see if I can put a yes in there. So no, I think it's a good pairs trade. All right. Sound okay? Thank you. Okay, good, Robin. I appreciate that. So now from there, I guess what we'll do is we'll go back to the currencies. And Amir has a very interesting tri-combo trade. Let's see. Let's put right there. Let's go back to the currencies. And we're going to look at the Turkish lira. And then from there we'll go to King Peso. Alrighty. Right. Why am I keep on falling into the same spot? There we are. There we go. Alright, and so from there we go over to the Turkish lira right there. And as you can see, Turkish lira, and we'll put it up on J4X. Right there. As you can see, hanging in the 21s and not letting go. It doesn't seem to want to be, fighting with that, which is kind of impressive in its own right. These are all-time highs, and it seems to marry itself up in that area. Been in that weekly buy for a while, for a few months. What else can we say about this product? Not a lot, since the thing has gone from $1 to $21. It's an enigma of its own. All right, from there we're going to go to the King Peso. The King Mexican Peso. It will become the pillar, if the news is right, which is usually wrong, and that is that the Mexican Peso is going to join the BRICS. And if it joins the BRICS, it will be the King Peso, because it'll be the most powerful currency in the BRIC indice as they create one. And so, we've talked about this half a dozen times in the last 3 days, honestly. I talk about it all the time. King Peso now. And so you can see there, it had a little issues with that big circle. That move on the upside was when they announced that they were going to join the peso. Join the BRIC possibly. Possibly. They hadn't agreed yet. But they found out that when they were going to join the BRIC, their currency went a little haywire. Made a 4 or 5% move. Started to act like the Turkish lira. So you can see there it's down into the 17s, just underneath 18. And it's pressing its way down. And that's, this is like, 5-year lows or 6-year lows at this point. And what else do we have to say about it all? I think that it seems to anticipate American activity, in other words, American politics, really well, the peso. Let's put it up on here, Mexican peso. Right there, there's dollar peso. So the way we're looking at it is we're starting to call it it's going to be when you look at it, the BRIC index to be, the peso will be the same position as the euro. It'll be the leader. And then the South African rand will do the same thing as the Japanese yen does, as the second most strongest product in the BRIC index. And then from there, the third would be is the British pound, which seems so apropos because then the Indian rupee will probably be number 3. And then after that, it's let's see, the other 3 is Canadian, Swiss, and kroner. And we figure that I don't see the bottom of the BRICS, the 3 BRICS of ruble, Brazilian real, and Chinese yuan being anything more than equal to, say, the kroner at this point when it comes to the index. So I don't see them as playing major roles inside the index at all. The ruble will, because it floats, that's for sure. The real is really bad. It doesn't float at all. It's almost non-existent. And the same thing with the Chinese yuan. So they're gonna basically depend on the top 3 to move the index around. All right. From there we go to, and that's what we do now. We talk about the King Mexican peso as the pillar of the BRIC index. All right. From there we go over to 2 currencies that match up to commodities, and that is we look at the Canadian dollar, which matches the oil. Now it's been marching up. When it's going up and losing, that means it's losing against the dollar. Usually oil, which we'll put over on J4X, has a tendency to go down in value. Okay, so when oil is going up in value, right, where is it at? It's right here somewhere, right there. When oil is going up in value, the Canadian is gaining against the dollar. In this case here, it's rising, which means it's losing against the dollar and matching to the selling in the oil sector. And then what we do is we slide over and do the same thing in the South African rand. And so we put gold up there. And there's gold doing the same thing, sliding down as we were saying to Amir. And then at the same time, we go over here and we look at the South African rand right there. And you can see it's, with the political problems they're having down there right now, it's become from almost a perfect pairs match. And that's a good example. Gold and South African rand were a perfect match pair. Perfect. And then the politics got in, where they found the $500,000 in the office of the president, and and it just messed everything up. And you can see it's been all over the place. But one thing is for sure, as much as gold has gone up in value, this should not have been going up, and this should have been going down. We should be in we should be in the 14s at this point with the way gold is, and it worked like that for a couple years here until this political turmoil that occurred. So that is what we have with the problem there. All right, now from there we let's see, that's the end of the pairs trades. So let's close that down, right, like that. And what we're going to do is we're going to give you we're going to go over to for the last few minutes, we're going to just show you what everything's been doing on our work. This way you can see it. There's the S&P 500 moving a little bit down. It's up 10 points though from its low today. I think it was at 30 at one point. Where's the low at? Yeah, 30 right there. And then from there we'll go to you can see crude. We've shown you many a time what we see in crude, and you can see our math. And then from there we go over to copper. You see copper is, and we always say copper is the eye. You're looking into the eyes of China when you see copper's action. So they're really pushing that down hard. And this is a May contract, so it's getting ready to expire. We're going to have to start looking for the next contract over the next couple hours. Matter of fact, I'm going to look as we speak right now to see if anybody has jumped up yet to take over that position. Let's see, copper in particular. Right there, and the May contract is still leading, but we're getting ready to move into the July contract over the next couple days. So, but the volume is still the greatest is in copper in May, but we're going to be switching to July. Is it July? Yeah, July very soon over the next day or two. You can see it's pushing itself into the sell there. From there, we've shown you what platinum is looking like. It's really sloppy and heading down, but it hasn't broken the weekly, so that's all right. Right there, it's still holding on. From there, we take a look at we did the gold and silver and so forth. Let's see, we've done. Did we do gold? Yeah, we did gold, right? Yeah, and silver right there. Seeing that neither of them are breaking that bad on the weekly signal. It's it's not bad at all. And so that's pretty much the gist of it all. And that is all we got. The markets are getting ready to open. So Doc is going to get out of here. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Have a good trading day. Be safe, be smart. Catch you all tomorrow on Happy the Hump Day. There we go. There we go. Pa-ta for now.